I just met a real estate investor who said Florida, New York, and California are 3 places he would never invest for climate risk reasons. Is that something that factors into the way you think about the world, or do you think are we over-indexing on that as an issue?
I don't know that I would combine
those. Well, let's unpack
I don't think I would
those three.
but unpack it a little bit. I think that we need to be a lot more cautious with the way that we invest. We can't ignore the climate risks, but I think as an investor, it's more important to be thoughtful about it, and especially with development, make sure that we are thinking about resilience, that we are thinking about the types of assets that we want to build, how they're sustainable, and also for cities really across the country, those on the coast and those not, to look at our existing housing stock and say, what are the investments we need to make in our cities that are mostly built to make those buildings stand up? And so I think to take an approach and say, we can't invest in 3 of the most populous states in our country. I don't know that that's going to get us
commercial real estate. I hear it may be available in New York. I want to get to you very briefly before we end, but I don't want to move off the interest rates question because you did not focus on that, or we've too focused on. It's not whether it's blaming the Fed, but is the interest rate really going to move the needle one way or another if they suddenly say, okay, you know what, now we're going to stop and go backwards?
Real estate is almost definitionally an incredibly leveraged asset class. Yeah. So, the availability and cost of financing absolutely moves, how much transacts, what the values are, et cetera. And I think we're in a moment where we have not necessarily seen values kind of appropriately and fully readjust to the levels that would make sense given where financing is. But I am not of the opinion that we need to, for real estate's sake alone, and our desire to do a lot of deals, should sort of get in the way of what are the Fed's obviously incredibly well-intended goals. So I think we need to adjust. I think we need to be a lot more focused on the fundamentals and not just returns, quite frankly, that we've been generating purely from very cheap debt.
So briefly to get back, because you came from Goldman Sachs, how do you think about your own trajectory as to what brought you to this as an issue? And if I'm talking to you a few years from now, where you hope to be. But let's take you to where we are right now. This is a very personal issue for you. It's one you've done over your career.
It is. So it's funny when you said the thing about where will I be in 5 years. I'll probably be doing the same work.
That's
this is what I do.
Teacher questions. Write your eulogy right now on this. I want to be kind.
I did grow up in a community in Houston, Texas that did not have sufficient quality affordable housing, and then there's a lot that stems from that. Not great retail, not great schools. I grew up in a pretty underinvested neighborhood, so that has stuck with me, and I feel strongly about directing capital to those places where it doesn't always naturally flow and where there is significant value to be had, both purely economic and social. So this is deeply personal work for me, and I would say what I'll be doing in 5 years. I'm very passionate about real estate. This is our built environment. This is where we wake up, where we go to sleep, where we go to school, where we live. And I think that there are not many more powerful ways to change the way that people live, the opportunities that they have, the opportunities that they feel. And so you might find me doing the same work 5 years from now.
Last question, philanthropy. Is so much of this really philanthropically driven in order for it to succeed? Because we always talk about you can do good and make money at the same time. Maybe if the mission-driven part's so important, should we be looking at more of this from a philanthropic point of view? Because it's always about government support as opposed to.
Yeah, it's a great question. I have a lot of both kind of faith and admiration for philanthropy. I think it plays an incredible role in so many of our, the challenges that we face, both as in the U.S. and globally. When I think about housing, I'm really focused and optimistic about how purely market-driven capital can play a role, and there's very genuine and authentic impact to be had. There's not a more, at least in my view, a more kind of change for a family or an individual than when you can make their single largest expense one that they can really responsibly afford and allow them the ability to invest more in their education and their health and starting a business. So there's incredible impact to be had. That said, I think my pitch to investors, which I'm not pitching, but if I were
Hey,
to, but if
you
I
can have
were to be
whatever
pitching,
money I have I'm not going to be in the room when you're pitching.
but if I were to kind of make the case to investors, investing in affordable and workforce housing, when done right with the public sector, you're investing in an incredible supply-demand imbalance. Like stepping back from real estate, what do you want? You want to invest in assets, products, places where there's incredible demand. It's insatiable, it's sticky, it creates stable revenues, it's defensive. And so for those who care about the impact, I applaud them. I care about it a lot. But for those who don't, investing in affordable and workforce and mixed income housing in our country, it's just incredibly smart. So
Great. I think I'm sold. So that's a good pitch and one we should, I think, keep making regardless of the environment.
I'm
So,
certainly going to.
excellent. Thanks for joining us, Margaret.
Thanks for having me.